I now call to the floor Josh Hodgson, of the COO of H2 Gambling Capital, and he'll be giving an overview of the Nordic iGaming markets in numbers. So pay attention because I will be testing your knowledge when he's done. But if you have any questions after, please hold on to them until he has finished. Thank you. Josh.
Thanks, everyone. Yeah, good afternoon. My name is Josh Hodgson. I'm the COO of H2 Gambling Capital. And today I'm going to provide an update of our analysis on the 4 largest Nordic markets with a specific focus on channelization, which has been talked about a lot today. And I think definitely I would agree with Pontus's view in, when we're looking at markets, it's something that we should really seriously consider as a success measure of regulation, or one of them. So yeah, I'd like to start by thanking Willem, as always, for having us speak to you all once again. And for anyone that has seen myself or one of my colleagues present before, you'll know that we include a lot of data on the slides. So please don't feel like you have to keep up and try and take notes and things. If you want a copy of the presentation, just let me know. I'm happy to provide that afterwards. So I do see many familiar faces in the audience here, but for those who don't know us, we're H2 Gambling Capital. We're the most trusted source of market data and intelligence on the global gambling industry. And we provide comprehensive market intelligence on over 150 gambling markets globally across market sizing, growth forecasts, regulatory trends, market share, and player surveys. So before we have to start, the legal team makes me put the disclaimer up here, but to summarize it in one sentence, we unfortunately don't have a crystal ball. So all the forecasts that I'm about to go through today represent our views at the point where we are today, and it includes all the confirmed regulatory situations and the proposals as we see them now. But as I'm sure anyone who's been in the industry for more than a week knows, they change constantly. So we make around 200 updates per week to all our numbers, and they reflect all the changes in reported data, regulatory changes, market developments, and the occasional global pandemic as and when they happen. So to start, we're going to have a look at a high-level overview of the European online gambling market before narrowing our focus into the Nordics specifically. I think this context is really important because no market operates in isolation, and many European markets are facing very similar challenges. So understanding the regional dynamics really gives us a better indication of what's going on at the country level as well. So if we start with the trajectory of the European online gross gaming revenue split by betting and gaming here. So the total European online market, this is including both onshore and offshore revenue, has grown from around 34 billion euros in 2020 to 68 billion in 2025. And we forecast it to reach 97 billion by the end of the decade in 2030, which is a compound annual growth rate of 7.4%. So gaming, which includes casino games, live dealer games, bingo and poker, consistently accounts for the larger share of GGR at 40 billion and currently makes up around 54% of the market. We forecast betting to generate 35 billion in 2026. Looking forward between where we are now and 2030, we project gaming to grow by 28% to reach 51 billion. We actually expect betting to grow slightly faster at a rate of 34% to generate 47 billion by the same point. And obviously, major sporting events are huge factors when considering forecasting for betting. So with the World Cup this year, we're forecasting a year-on-year jump of 13% from last year to this in European betting revenue. So now if we look at the same overall market trends, but we're breaking this down by onshore revenue and offshore revenue. And our definition of onshore and offshore is very simple. We don't try and argue between 50 different shades of grey. An operator that is onshore is one that holds a local license in the market in question. An offshore operator is one that doesn't hold a local license. So regardless of if they hold it in any other market, if they don't have it in the market in question, they are offshore. And when we're thinking about channelization here, we're referring to online betting and gaming again specifically. So lottery revenues are excluded from these numbers. because they're not markets that are open to commercial operators. So onshore revenue has grown strongly in Europe, with the market more than doubling from 23 billion in 2020 to 49 billion in 2025, and it's forecast to reach 72 by 2030, which is an increase of 47%. So unfortunately, the offshore market has also grown from around 10 to 18 billion over the same period, and we expect it to reach 25 billion by the end of the decade. Still, I think the wider picture here is probably more encouraging than most people would expect if you only use LinkedIn for your market analysis, because the sentiment on there is pretty bad at the minute. But if you remember, we have had regulated online gaming in Europe for a long time now, and many markets are doing a very good job of regulating. So onshore revenue is still there. It's still growing strongly, despite what a lot of people on LinkedIn are saying. So if we look at this in terms of a channelization rate, so this chart illustrates the channelization rate for the region as a whole. So the proportion of online GGR that is flowing through licensed onshore operators versus offshore. It's worth being clear about why this metric matters so much, because channelization is not just a commercial measure. As Pontus very correctly pointed out before, that every euro staked onshore is a player choosing to gamble within a regulated environment with deposit limits, self-exclusion schemes, age verification, and recourse if something goes wrong. But every euro staked offshore is a player gambling with none of those protections in place. So across Europe as a whole, the onshore channelization rate has been broadly stable at around 71 to 74% for the last few years, and it's forecast to remain in that range through to 2030 without significant gains in share expected for either the onshore or the offshore market. But these averages, however, mask significant variation by country, as the next slide makes very clear. So this chart ranks European markets by their onshore channelization rate in 2025. The onshore revenue data here represents the actual reported data from the regulators themselves. The offshore data is our forecast for the market, which is based on tracking of multiple sources of monthly web traffic, affiliate traffic, web search data, as well as our own in-depth player surveys. So we are looking last year here. So the UK is still at the top, around 92%, although if it would be a very different story if we were to look this year. And as Pontus pointed out as well, many operators are leaving the market due to the doubling of the taxation rates. So whilst we're looking historically here, many of the markets still do keep the same structure. So if we look at well-regulated markets like Italy, around 90% channelization rate, Greece, Czech Republic, Romania, and Spain, all sitting above 80%. These are markets with long-established and well-enforced regulatory frameworks. But if we look at the Nordic markets specifically, we can clearly see it's a tale of two sides. So at one end, we have Denmark and Sweden at 74 and 72% respectively in 2025. Both of these are comfortably above the European average and well within the range of what we would deem a well-channeled market. At the other end, we have Norway and Finland with channelization rates of only 23 and 26% respectively. Again, sometimes when regulators or other people use channelization rates, they include lottery as well, which is why this may look a little lower. But this is just online betting and gaming specifically. But both markets show massive volumes of revenue leaving the markets to offshore operators. So having seen that snapshot for 2025, this chart shows how the 4 Nordic markets have moved over time and where we forecast them to head to 2030. So Denmark and Sweden have actually followed quite a similar path. They both started in the sort of mid-80s and both saw channelization erode to around 70 to 72% by 2024. As we saw, both channelization hit by the rapid growth in crypto casinos, which we saw really sort of rise up in the aftermath of the COVID lockdowns. However, both now are, looking like to improve towards the end of the decade, reaching potentially 76 to 77%, which based on what we've seen in the last 18 months of data, we have seen a significant slowdown in growth of offshore traffic for crypto casinos specifically. So we do feel that the explosion in that is something that is settling down now. But of course, Finland is set to be the standout story on this chart. And under the monopoly model, channelization had been in a steady decline from around 45% in 2020 down to a low of just 18% in 2026, which would put it amongst the lowest rates of channelization in Europe. But with the license market opening next year, we forecast a dramatic correction in the channelization, jumping to 64% in the first year, and essentially catching up with Denmark and Sweden by 2028. Initially as well, before the recent regulations were released, we did actually have Finland potentially reaching a bit higher, but with the regulations as they are at the minute, and of course they are subject to change, we do feel like sort of the mid-70s is potentially where that market is headed. And then of course, at the bottom here, there is Norway. Channelization has fallen from around 40% to just 21%. With no licensing reform currently on the table, our forecasts assume that it will stay there. So keep in mind what this channelization really represents, and these lines are a direct reflection of the proportion of spend that's kept inside a licensed and protected environment versus what is leaving outside of it. So that's the regional picture. Now let us take a look at the four markets in turn and look at what's actually driving those channelization numbers. For each market, we'll look at the growth of the online market split out by onshore and offshore revenue. And if we start with Denmark, which is in many ways the model market of the Nordics, having been regulated since 2012. Before anyone says it, no, Birgitta and Anders didn't pay me to say that. That is our view. The total on market, yeah, the total online market has more than doubled from 0.6 billion in 2019 to 1.1 billion in 2025. And we forecast it to reach 1.3 billion by 2030, largely matching the wider European trend and growth rates that we've seen. So that translates into a channelization rate of around 75% in 2026, which we forecast to say largely the same out to 2030. But Denmark did feel the impact of the offshore surge in 2023 and 2024. And as we will see, like no Nordic market was immune to this, but the regulated market responded really well. One possible factor to explain this can be seen in the results of our player survey data for Denmark, which showed that the majority of players said that reputation and brand trustworthiness was one of the most important factors for them in choosing which operator to bet with. So that trustworthiness and reputation should absolutely be tied to being licensed and onshore in a market. And the operators should be allowed to be able to communicate this through marketing and advertising. So whilst the days of double-digit revenue growth year on year may be gone in Denmark, and looking at this from a glass half-empty perspective, would focus on the fact that the onshore market is making very slight headway into the offshore growth. However, in the current climate, for an onshore market to be holding its own is better than what can be said for many European markets, which are facing increasing tax burdens and regulatory restrictions, and channelization is going absolutely in the wrong direction. If we move on to Sweden, which is the largest online market by revenue in the Nordics, with 2.1 billion euros total in 2025, which we forecast to reach 2.5 billion by 2030. So with the market channelization initially settling in the sort of mid-80s, but as this chart shows, again, the offshore market has been seeing the faster growing segment in recent years. So comparing 2025 with 2023, onshore revenue grew just 5%, whilst offshore grew by 19%. So the offshore revenue has roughly trebled since 2019 to around 0.6 billion a year. And that has been the subject of considerable debate in Sweden around licensing scope, enforcement, and B2B supplier permit regimes. And this may not be entirely surprising when 52% of players that use offshore operators in the market say that the main reason they do so is because of better odds and bonusing in other markets, with other operators that are offshore. This is obviously an area that the offshore operators have a significant advantage in, given that they don't have any tax or regulatory burdens to deal with. So they can offer incredibly high bonuses and RTP percentages, with some offshore slot operators even offering loss-leading games with 100% RTPs. So wherever the offshore offer is more attractive, a portion of players within the market will follow it, either knowingly or unknowingly, leaving the protections of the license market behind them. So looking forward, we do expect the onshore market to slightly reassert itself, growing from 1.5 to 1.9 billion by 2030, whilst offshore growth plateaus, which is something that we've seen reflected in monthly traffic and affiliate traffic trends over the past 18 months. So this will help slightly lift channelization back to 77% by the end of the decade. Now to the market that everyone is watching, the next Nordic monopoly to open up. And this chart shows exactly why reform was needed. So comparing 2025 with 2023 in Finland, onshore revenue actually declined by 8%, whilst offshore revenue grew by 34%. So all of that 22% growth in the total market all went to the offshore operators. By 2026, we forecast the offshore market to account for over 1.1 billion of a 1.3 billion total market. So the monopoly is retaining barely a fifth of online revenue. And from a player protection perspective, this is a very striking statistic. It means that 80 cents from every euro staked by Finnish players currently sits with offshore operators offering no player protections whatsoever. So there's no deposit limits, no national self-exclusion, and no local authority if something goes wrong. So then from 2027, we hope the picture will begin to transform, with the license market opening up from a relatively reasonable regulatory framework and a tax rate where we expect onshore revenue to jump from around 0.2 billion to 1.0 billion in a single year. So the bulk of that revenue will be coming from existing offshore operators converting to the onshore as the major operators take licenses in the market, alongside new players coming online following the increased visibility initially led by all the media attention. But in total, we forecast the Finnish online market to reach 1.8 billion by 2030, 3 times its 2019 size. Looking at how that same Finnish data looks through the channelization lens really brings home the scale of the shift. So channelization under the monopoly fell from 45% in 2020 to a forecast low of just 18% in 2026. From a launch in 2027, we forecast 64% channelization year one, rising to around 76% by 2028, at which point Finland will become essentially level with Denmark and Sweden. And the real prize here is not just the tax revenue, it's bringing the majority of Finnish players back inside the regulated market, where the necessary responsible gambling safeguards actually apply on the sites that they will be playing on. The speed of this correction reflects a lesson we've learned from other recently regulated European markets, where the bulk of demand is already being served by offshore operators, and a well-designed licensing regime converts that revenue very quickly because the operators and players, they're already there. So, of course, the final shape of this will depend on the detail, which is yet to be fully confirmed. But the product scope and enforcement against those who remain outside the system will all determine whether Finland succeeds in its objectives. And then, very quickly, we come on to Norway, which is unfortunately the cautionary tale of this presentation. So the headline numbers look like a growth story. The total market has more than doubled between 2023 and 2025, up 110%. But if we just look at where that growth's gone, it's obvious that it is not with the monopoly. So offshore revenue has jumped from 0.5 billion in 2023 to 1.1 billion in 2024, a 162% increase. Which is driven overwhelmingly by the explosion in crypto casino supply that is now targeting the market. So the onshore monopoly, meanwhile, grew just 19% over the same period and sits at around 0.3 billion. So virtually all of the market's growth is being captured by unlicensed operators. Again, this is unsurprising when we consider the results of our Norwegian player surveys. 28% of players say they use offshore operators because of better odds and pricing, 22% because of better bonusing and promotions, and 17% because offshore operators actually offer the types of games that they want to play. And by 2030, we forecast offshore revenue to be 1.7 billion euros out of a 2.1 billion euro total market. And that's how things look in terms of channelization for Norway, and it's a pretty grim picture. But if we touch on very recent trends, something that I was speaking to Anders before just recently, actually the explosion in crypto casinos is something that we really need to consider when looking at all this data, because this chart highlights one of the most significant developments in offshore growth in the Nordics and Europe as a whole over the past few years. So web traffic data across 5 markets, so Denmark, Sweden, Finland, Norway, and the Netherlands, shows traffic to 5 major crypto casino operators grew from around 10 million visits in 2021 to 128 million in 2024. Their share of total offshore web traffic rose from 2% to 25% over the same period. The crypto casinos are attractive because they offer big bonuses, no deposit limits, anonymity, incredibly attractive RTP percentages, and the biggest brands are now very well known and actually trusted amongst players. So crypto casinos have dramatically expanded the supply of offshore options available to players, and they're extremely difficult for an onshore operator to compete against in several of the key areas that matter most. So at the moment in Denmark and Sweden, and hopefully Finland, we are moving forward, and the onshore market is able to compete by keeping the majority of players enjoying their time on licensed sites. However, further regulatory restrictions or increases in tax rates make it much harder for onshore operators to offer the games that players want, and the offshore market will take full advantage of this. We can look at the Netherlands as a sobering example of this. Not 2 weeks ago, I presented our analysis on the Dutch market at Gaming in Holland and showed that the drop in channelization from around 80% to 50% in just 3 years post-regulation is a result of this directly. And with the confirmation of a new raft of restrictions in the market earlier this week, things are likely to get significantly worse before they get better, hopefully, in the Netherlands. So to pull the key findings from the presentation together, Denmark and Sweden are amongst the most highly channeled onshore markets in Europe, and we expect them to maintain that position if the current regulatory trends stay as they are, with channelization forecast to reach highs of 76 to 77% in both markets. Next, we expect Finland's channelization rate to improve rapidly post-regulation, jumping from 18% to 64% in the first year of the licensed market, and hopefully catching up with its neighbours by 2028. And thirdly, over 1 billion euros a year is leaving the Norwegian market to offshore operators. And on the current policy, that's set to reach 2 billion by 2030. So of the 4 markets, Norway is a clear outlier and the one where the policy debate has the furthest to run. The thread running through all of this is that channelization is ultimately a player protection metric. So where the licensed market is attractive and competitive, as in Denmark and Sweden, a large proportion of the players choose to stay within the regulated environment that was built to keep them safe. Where it's not, as in Norway today, or Finland as it was under the monopoly, players leave the market, either knowingly or unknowingly going to offshore operators. And with that, they take on all the risks of an unregulated market in the process. So that's the real cost of low channelization numbers. And that's why getting the regulatory balance right matters far beyond just looking at revenue numbers directly. So with that, that brings us to the end. So I say thank you all very much for listening. Thanks.
Thank you very much. Thank you very much, Josh. That was really insightful. And I heard you use the words grim. And I think for some markets, it's definitely the case. And thank you very much. And I think you highlighted very well that channelization is consumer protection and therefore should be left, right, and center in our industry. Thank you very much.